Hey fellow trader, welcome to Dean's Dojo. This is my journal. This was the 31st of August, and first of all I did such a dumb thing. After I finished making my little video for yesterday, I was just having a glance at the chart, and it's like morning, and in the morning I really don't want to trade. It's so slow, and the morning are for different things for me, like morning here in Europe, that would be overnight in America. Somehow I just saw this surge up, and and then in the retracement, and I deliberately didn't draw this, but then I drew something like, short-term break new low, and then I tried every reason to somehow go long, and and I thought, well, my thought, it was not all bad, but like I thought we're coming up the two tops here, so we could test yesterday's high. But just generally, I don't even want to talk about it because, or like, not, it's not a real thing because it was overnight, and I just shouldn't do that. I was just so eager to trade as always. Okay, but then what is really happening is we have this channel, so we cannot go long, and it never really breaks. Again, this is so hard to say, like here, yeah, but I would say it didn't break. So then the real hours began here somewhere, and also that is slow, and I'm considering not trading like 1.5 hours before market open, but maybe only half an hour. Okay, anyway, so then I had the channel actually similar to, or the same as Thomas has it, because he somehow has it very narrow, and he is reluctant. He never really wants to broaden his channels, He keeps this one, and then he says probably this is an overshoot, a big, huge overshoot, and a little itty-bitty break here, and that, okay, but I saw it like that too, because I wanted to see it that way, because I wanted to get this divergence here. And this, again, I should make a video about lane divergence. And this was a 2000 tick chart divergence, and it didn't work. And I also think it's just too forced with this channel, and we have a huge move down, and it's very counter trend style and all, and there was nothing else to support it but the divergence. Plus, I was constantly playing with the channel. If it's 1 millimeter up here, 1 millimeter makes a lot difference down here, so we could just as well have it like this with midline. Not bad, huh? And Mac has it like this in his video. So we wouldn't have broken until right here. So until right here, we would not go long for sure. Okay. Anyway, also with the rule of the EMA below SMA, we will never go long. Here. What I wanted to see, and of course, because Thomas also saw it that way, so it's not completely illegal, is I wanted to see it like similarly to that, see overshoot, break, new low. And then here also now there is confluence with Fibonacci's from here, I think. See, I still have my little inhibition that I don't use them so much. Yeah, I mean, this is pretty neat. And what I do then is I go on the 512 tick chart, and this setup is really good if you have a divergence on the 512 tick chart at a 61.8 line, like all of it together. It is a high likelihood to work out. And if I saw it like that, it's kind of legal, I would say. We played out really everything now. If I see it like that, we bounced from 61.8, and I had two attempts. The first one was premature because it was one tick above the 61.8, and the second one, it's on the 512 tick chart. I can show you quickly. It is here. It's these two arrows. So the 61.8 is one tick below that, so it's here, I think here. And the first one I took was that one, because we have a divergence, which I will make a video about. And here is the real one. This is the beautiful one. Just quickly, we come from below the 20 in the indicator, in the RSI or stochastic. We come up and we make a hook, and we go off. And this hook is a higher high to that, higher high to this. And on the price, we make the exact opposite. We make a low here, and we make a lower low. So we make lower lows in price, higher lows in the RSI, like that, plus it's at a very specific location. And see how, I mean, this is the most sniper entry I ever do. It is like 1 point this bar. And I enter, one contract goes off at 1 point, so that I'm in for free with the second contract. And if the risk is so small, I can easily double the contracts, right? Because then it's the same as a real trade. Okay, so I was in, already 1 point was out. Plus, one really big thing also for me is the gap fill. That's from David Halsey, by the way. If you have the, and he calls gap really just to yesterday's close. Any move to yesterday's close that is less than 10 points away. If we are less within 10 points, then we are inside of the gap fill. And this was exactly 10 points to the gap. So I put my order at the gap, but I should go like 1 or 2 ticks before, because you see it was 1 tick before the gap, it reversed. And I had to get out somewhere here. I tightened my stop, of course, because I don't want to give it all back. So still, that was like, I think 8 points in total, or 7 from this and 1 point from the little first contract from the protector. Good, but because I did this tilting stuff up here, like these random things, and this bad divergence maybe, no, okay, because it's at the 50, I think it's fine. I was like rather break even only before the market started. They already had some action here. Then, just one little note, the indicator setup that I presented 2 days, or like in some last videos from the RSI, just to note, it would have worked perfectly. It was right at the open, very quick, and I'm like frozen there. So EMA below SMA, angling down, downtrend. And we don't care about no channels, because as I say, it could be this channel that Thomas has, correct, but what if it's this channel that Mac has, also correct in my view. Now it only broke, so we're still looking for a new low if this is correct. And if I had that, then this would have been a no-brainer, because again, look, we're in a downtrend, we cross above the 40, 60, and when we go down again, here is the entry. So it would actually have been only after this bar, and that's a huge stop. But maybe we could anticipate it. Bit tricky, but so then that would have worked out beautifully. We can see how much it would have, let's say we really only got in here, stop is up here. I think a 2-to-1 would have still worked. Oh yes, a 2-to-1 would have brought us exactly at the low. And that's where I would exit, at the low, because we make a new low. Okay, I like my targets to be in logical locations, not only 2-to-1, but somewhere where I, if it's a bit more than 2-to-1, I take it, a bit less than 2-to-1, I take it, or 3-to-1. Good, so just to say, indicator setup worked beautifully. Then, one more important thing that I wanted to say is, well, here then I took another 512 out of Fibonacci, and the Fibonacci was from the days open to low, I guess. Was it that one? That looks a bit stretching it. No, it is at the 61.8. And the strength of that is, I can show you, from here to, where was it? I always have to do that. Otherwise I become addicted to Fibonacci's again. Here, I'm pretty sure I took, yeah, look, it's beautiful, beautiful. We have the price making a hook, the indicator making this hook, and the price making the opposite hook. So it comes from here, makes a higher high, lower high, higher high. And this is again, it's 1 point or something, 1.25 points. And it worked out just, that's what often happens. It just works out with your protector contract, it stops out the other one. No harm done. But I have to take care with these and not let them go overboard. They're very powerful, but very sneaky. Then, bigger picture, what I liked a lot is, of course, I saw this spike and channel. It's such a flat channel. I am always suspicious of these. Plus, what was more clear to me, or like more near term, is this upward spike here, upward. And yes, you can say it tried to make a new high and failed already, but I was sitting on my hands here on that failed second entry long. Exactly because I think this channel was pretty strong and I think it wants to make a new high or another attempt, but mostly because of this. Look at the 5-minute chart. Okay, this is this downward surge, no going short here, we're way away from the EMA. And what happened then was 1, 2, 3, 4 bullish bars, 3 of which close near their highs. This is basically this strong spike here. That's this one, right? And all the people who took this failed second entry long, I mean, yeah, they took a chance and it just about worked. But you go after, and that's 1620, so that's already after these 3 bars printed. That's after these 3 strong bull bars printed. And we absolutely expect, if we have a strong move like that, to get at least an attempt at another leg up. That's why I was sitting on short hands, like my hands for going short were sat upon. And what I was looking for is actually the opposite, to get that second attempt or a leg up. I know this is a strong move down, it looks strong, but you know, there was like stuff in between. So it's actually already 2 legs down here. So instead I waited and I trusted my indicator setup. Went long right after this bar because that's where we form our little turn above the 40, and that worked perfectly. Of course it's tricky because you could also wait for the higher low or something like that. You don't always get it. So yes, it can fail, but what I did is, and that's another thing, like today is a lot of I thought so much, my brain was hurting, but I also learned from Al Brooks that when you have a possible trading range day, and after this strong down and strong first leg up, it looked like a trading range day, a possible target and a magnet for the rest of the day is going to be the open. And the open is here. You see right where the first candle started. This is the night the division of yesterday and today. This first candle has its open here, so where this blue line is. And do you see where this reaction was? Open, at the open. And yes, then we went above. And actually Al says that often the open could be in the middle. You know, it's a magnet, and if you have a magnet, things are swinging on both sides. So what my target was, in short, for this indicator setup, I mean, I knew there was a downward channel, but I just kind of ignored it. Someone has to win. And I put my target, first I looked what is around, what is around 2 to 1? That would be here only. But then, because of this open, you know, 2 to 1 would be good here if I thought, okay, I just want to get a new high of this channel. But because I looked at the 5-minute and I saw the open is a target, that's in reach of 3 to 1 or even more. So basically I put my target at, is that right here? One more tick up, the entry was above. That, yeah, exactly here. And I went out here. Yep, beautiful. You know, and that's 6 points for a 2-point stop. And that's the trade I want to take, because then I can go wrong, and you know, and I didn't hesitate here. Maybe a bit, honestly, just a bit. But the rest, I had to go after that. Yeah. Okay, so only real bad thing is this absolutely random. So if we cross that one out, I have like 4 points more because I did twice. I entered twice and it was just bad. I don't know. I was just, yeah, it was just bad. Okay, that's all for today, I guess. Yep, as I said, the month of August ended bullish, and it's the 1, 2, 3, 4, 5, 6, 7 consecutive bull bars on the monthly chart. Most likely the next one is gonna be a bear bar, but the bulls made it hard because they closed near the high. We will see what happens. All right, that's it. Have a nice day, and goodbye.